let's get cracking. So let's get cracking. It's really an honor to get to kick off the discussions today. This is one of my favorite events of the year, and I can't believe how full the room is for straight away on a London morning start. So thanks everyone for coming to join us. We'll try and do our best with the 45 minutes we've got today. And we have a little bit of a big ask, because this is quite a general topic, the global forestry investment landscape. So very happy to have the panelists here to do the heavy lifting for that. I'm going to moderate. My name is Mary Kate Bullen. I'm the MD, Head of Business Development and Sustainability at FIA, Forest Investment Associates. We are going to skip doing big intros of ourselves because everyone does have their info on the app or on the website, and we'd rather hear from these folks than hear about them. That said, I'm pretty excited about a couple of characteristics because we've got a diverse panel with diverse perspectives. A few things in common, though. I think we have 3 PhDs on the couch, which is a lot. And I think everybody is a forester except for me. That's the big caveat. So everybody here is very well equipped to speak about both the technical side as well as the investment side of forestry from a range of perspectives and pretty diverse careers. We've got an asset owner on the couch. You guys can raise your hands when I talk about who you are, I suppose. Alexi's going to be representing that perspective from someone who's been investing in forestry for quite some time, as well as prior management on the ground experience as well. We have an asset manager with Gwen Busby. We've got folks who've worked extensively in international agencies, government, and now consulting, working with private industry. And we've got from Tanzania representing perspective of government agencies and carbon monitoring. So pretty diverse perspectives here, and I think we can give a really well-rounded effort at the forest investment landscape. So our goal, because I think this event has a pretty broad audience, from folks who are pretty new to forestry to folks who are really deep in the weeds. And our goal is to give us a common foundation for the discussions for the next couple of days from that forestry investment perspective. What does that landscape look like? You might say, I love a bad pun, I'm sorry, or a bad metaphor, if you will. We're going to do the land prep phase. If we're lucky, we might, someone just looked puzzled, so see there's technical forestry we can do here. If you want to plant a tree, it's good to prepare the soil first, it will grow better. So we're going to land prep now. If we're lucky, we might get to planting a couple of trees, and then it's the rest of these panels where we're going to get into the more specific parts of strategy and execution throughout the next couple of days. So with that, I think let's go ahead and crack on. Gwen has told us that she will do us the honor and privilege of explaining some of the fundamentals of forestry investment. From your experience, what are those traditional drivers that are making people continue to be interested in the timberland asset class? What is enduring, but maybe how is that interacting in today's market? You know, reflecting on the words from Chris from the OECD perspective of the world we live in today.
Yeah, thanks, Mary Kate. It's great to be here with everyone, and I see such a nice, vibrant crowd ahead. So I lead research and strategy for Nuveen Natural Capital and have done a lot of work on the enduring case for timberland as an asset class. And it's really built on 2 basic pillars. That first pillar is the market fundamentals, and the second pillar is the set of portfolio level benefits that the asset class can bring to a diversified portfolio for institutional investors. So when we're looking at market fundamentals, that's really focused on the strong and growing demand for wood products. So timber is a basic input to production for housing, for tissue, for packaging, more and more so now even applications for mid-rise and industrial building applications with mass timber products. And demand for these wood products is continuing to increase and grow. Expectations for demand growth by 2050 range from anywhere from an increase to 45% up to 200%, kind of depending on what your assumptions are and what the boundaries for that analysis looks like. But demand growth is really pushed ahead by population growth, by economic growth, and even the tailwinds from decarbonization. So increasing demand for low carbon inputs to production and sustainable inputs to production. When we turn to the portfolio level benefits, there's really kind of a few that I'll highlight here. One is the diversification benefits, so including timberland in a diversified institutional portfolio brings an uncorrelated asset class into that portfolio. Lack of correlation with capital market cycles, with stock and bond markets, and that helps to improve risk-adjusted returns. the risk-return profile of the asset class itself, a very stable income return from real asset yields, capital appreciation component of return from asset sales, and then an ability to hedge inflation. And related to that inflation hedge is the resiliency of the asset class through periods of rising interest rates. And that's something that's really shown through in these past couple of years. Rising interest rates are the policy response to high inflation, and timberland as an asset class is really well buffered, protected from a higher cost of debt relative to other asset classes. So when we look back at the past 3 decades of timberland performance, in every period of rising interest rates, we saw sustained positive performance from timberland as an asset class. And not only that, but when we look at the average spread between timberland returns and the yield on 10-year treasuries, through those periods of rising rates, we actually see increasing spreads relative to treasuries. And that is in stark contrast to what we see in stock and bond markets, where we see through those periods of rising rates, shrinking spreads and even spreads that are turning negative. So it's kind of an overview of portfolio level benefits and some of the big market drivers.
Yeah. Thanks, Gwen. That was an amazing summary of some of the things that have brought investors to our asset class over time. I think to bring it into a real world case, Alexi, maybe you could share with us a little bit about how you see those drivers playing out both in your active portfolio and how you're thinking about allocations and the growth of that portfolio.
Yeah, so the reason we invest in timberland is really the diversification benefit. So as Gwen mentioned, low correlation with other major asset classes, and that's really the fundamental. Addition to that, as Gwen also mentioned, inflation hedging, and it was interesting, we saw or have seen over the past couple of years in the US, as interest rates have increased, discount rates have slightly even decreased on valuations. And the third point is the good risk-adjusted returns that is possible to achieve from timberland and have been achieved.
Yeah, that's really, really helpful. I guess as you think about, from your seat, I'm sure you'd like to have more timber, a little bit a bigger portfolio and growing. How do you see those conversations playing out when it's something like diversification as a driver, but then your asset class is really shining in its moment of performance against these like inflation moments and you're able to show the resilience? What does that lead to any interesting conversations internally, or is the vision so long-term that it goes, good job, timberland, you're doing your job?
We've been lucky enough to have strong performance on timberland since inception over the past 13 or so years. But we really need to remain quite agnostic in relation to the opportunities that come our way, and opportunistic in terms of acquisitions and sales and asset allocation.
Yeah, absolutely. Opportunistic and disciplined.
Yeah.
Great. Well, Peter, I wonder, turning to you, Gwen referred to some of the fundamentals, and what has been the story behind forestry is timber and wood. It feels like wood is facing a moment like no other, with the understanding of the bioeconomy, the circular bioeconomy's needs for a sustainable future. From your perspective, what does this mean in terms of opportunities for the asset class as well as some challenges?
It's true. We see a surge of the bioeconomy possibilities, and the transitions that many are calling for will, to a large extent, be possible to meet through the forest and wood-based sector. So there are many opportunities. However, the main challenge I see from an investment perspective is that one must not get stuck in the forest. Because, as we heard also from Chris in the beginning, scalability is an issue. Finding ways to aggregate is an issue. And unless we can connect those timberland investments with the full value chain, we will never be able to scale at the pace that we want to see. And therefore, one of my main points today in this panel will be that unless we can elevate the values, both the financial values, but also the climate benefits, etc., of the full value chain into these investments, I think scalability will be an issue, and we will be stuck with fairly well, relatively small scale thinking.
I'm curious, do you see that scaling as a challenge for the resource base to scale if we're not connecting to the value chain? Or are you talking about the capital deployment scale and it having greater opportunity if you broaden the view of what's investable?
Well, I was referring to the financial scalability, but of course these are communicating vessels. With more investments, you will get a higher supply possibility for fiber and wood as well. So it's not that these work in separate containers. It's a very strong but long-term connection between the fiber supply and the scalability of the investments.
Yeah, I'm going to pitch a quick bonus question we didn't discuss to the folks in the middle here. I mean, have you seen that playing out in any of the opportunities you review or your portfolios, the connections through to value chain, maybe processing, infrastructure, reintegration? If either of you had anything, feel free, but no pressure.
I suppose the challenge some investors may have is the different buckets that they have. The bucket that we have is timberland, which I think is loosely defined as forest-based, and a separate bucket for an infrastructure, and then a separate bucket for farmland. So it's difficult to incorporate some of these upstream and landscape management benefits into that structure.
Peter?
Yeah, absolutely. I totally agree. And what we see is instead a surge of constructed markets on carbon credits and biodiversity credits and what have you, which are also inside the forest. But that's actually quite counterproductive for the investment case. The main value financially as well as for the climate is outside the forest in the value chain.
Could you expand upon that a little bit more, the main opportunity outside the forest? I think that might be counterintuitive for a lot of us. I'd love to hear more.
Well, the value added on the wood is by far much higher outside the forest than by roadside. That's I don't think very strange. And as it comes to the climate benefits, yes, we can store a little bit more carbon in the forest, especially if we manage them actively for wood production. But it's when we take the wood out of the forest, we can do some really useful things with it to counteract our fossil dependency. Unfortunately, a lot of the interest in the carbon credits markets and biodiversity credit markets are not really that interested in the emission reductions outside the forest.
Yeah, it's interesting. There's a quote, I think it's the 2019 IPCC paper on climate change and land, has a quote around the greatest climate mitigation benefit from forests is going to come from the sustained forest management with sustained yield timber harvest over time, where we let those forests grow, we harvest the timber, we transform it into carbon storage vehicles of different types of harvested wood products, ideally substitute for higher emissions embodied products, and let that forest regrow and do that cycle again and again. And we get the positive accrual of both the benefit in the forest, but as you say, the pool that can keep growing beyond its max capacity is actually outside the forest in the carbon in the products that we're all using around us. So that's quite interesting. I guess on the note of carbon, Darrow, I'm interested from your perspective here if you can share a little bit more about some of the work you are doing and how you see that intersecting with forest investment from a carbon perspective as a starting point rather than a fiber supply starting point.
Thank you. It's honor to be in this discussion, and so my point of view, coming from the developing part of the world, is that yes, we see there will be complementarity, but there will also be some competing, depending on how things will evolve. One of the key issues is that we are going to see an intersectoral linkages, and most important thing will be how we define the sustainable management of the forest and across the value chain. And looking at this, the issue of a legal framework that are in place, it's going to be crucial to see whether it's going to be complementary or competing. And so if you think of it in the natural forest point of view, you see that a country like Tanzania, for instance, yeah, we have much of the forest within the natural kind of setup. We are having like 48 million hectares of forest at least 50% of the land is kind of reserved. And you will see that there is a lot that it's going on to get into that. And having a proper regulation, it's an important thing. So, for instance, in 2022, it's almost a year, we had a carbon trading regulation that were acted, and within a short time of 1 year, we had projects that are interested, companies that are interested in investing on the carbon market, especially on the land base, about 70%. So we had 48 registered companies, and 70% of it is land agricultural based on the soil and the conservation and so on. So you could see that in a country where we have a high deforestation rate, which says that that will be the competing end of at least 469,000 hectares per year are lost, and 80% of the energy used is wood-based or biomass-based, and agriculture contribute 90% of the GDP. So bringing in the carbon asset, it's going to be a complementarity, but like I said, it depends on how you put the regulation framework to define clearly the sustainable forest land or land management.
Great. And so you said there's 48 projects have come in within 1 year since the regulatory framework was announced. 70% of those coming from land. That's really tremendous and encouraging. Of those 70%, I'm curious, are there some that are conservation only, some that are production, maybe reforestation for timber? Are there mixes? What types of projects are you seeing within that 70%?
Yes, we have some that are afforestation restoration. We have some that are conservation, under RED+, and then we have some that are using soil improvement, the soil biochar and sustainable management of the land. We have some in the agroforest setup. Yeah, so we have a very broad scale and opportunity to that. And the really good thing is that unlike the other parts, we have still large parts which are in agriculture and large part of the land that have a potential to do a soil carbon kind of investment. Yeah.
Yeah, one of the things you mentioned in our prep call was a phrase I really liked, and it resonated. I think it made Gwen smile particularly large too, about government has a great opportunity to facilitate, not just to regulate, which is music to little investor ears, I suppose. How are you seeing, since that regulations come in, are you seeing more interest from the financial sector as well? Or who are the main actors that are responding to this regulation that can be a facilitator to get sustainable capital flows into the land sector?
Yeah, so at the moment, we are seeing mostly the private individuals coming in. It's still a little bit skepticism in the financial sector. And I think the reason is we just started. It's only a year since we have the regulation, and there's still a lot of perceived kind of risks that are there. But we have seen, especially the local banks now, the financial sectors trying to come in. The challenge we're facing actually are three main challenges. One is the capacity to develop bankable projects. It's one of the areas that it's a little bit a challenge. And both at the national level and within the country, there's no that capacity to develop this properly bankable and projects, but the market space also, it's not that much big, especially when it comes to deciding or getting standards for the ecosystem services that could be get from the wood, from the forests. So this is some of the challenges that are also making the financial institutions a little bit skeptical in getting this. But the regulation has shown tremendous outcome, because now we have seen most, especially the local banks, knocking in that we want to engage and to understand. The challenge is they don't know the standards and the language of the ecosystem services not integrated in the banking system. Therefore, it's difficult for them to see how they would tap the opportunity.
Absolutely, there's a large learning curve that needs to happen there for sure. I've just realized I had a dereliction of duty. I forgot to mention that we'll take audience questions, so start formulating them because we'll take them in a few minutes from now. But you've just mentioned other ecosystem services. Peter, I'd be interested if you have any sort of contrasting views or supporting views to DEO in both carbon and other ecosystem services when you think about the way that multiple objective focuses are affecting the way financial flows are coming into the forest sector.
As I said before, I think we have a serious competition situation here where we're constructing markets inside the forest that are not making visible the benefits outside the forest. And this is, in my view, the biggest market failure we have to deal with. If you take the example of that again Chris mentioned in the beginning, that you can get a few dollars per ton in a carbon credit market, voluntary as it is, and so on. But the builder in Europe, at least, that downstream chooses wood instead of high emission material will be able to reduce the emission, the corporate emissions, and thereby sell the carbon credits in the ETS system at a much higher value. That value is not visible to the timberland, and it can only trickle back to the timberland through higher wood prices. But we have a major market failure here in the timberlands are not dipping into. Instead, we have this structure of which is building on IPCC and the climate politics, that forest is seen as a carbon storage. That's it.
And wood products are viewed as delayed emissions rather than viewed
well,
as
wood products are also seen as
Yeah.
storage, which is again a market failure. The big thing about wood-based products, not the storage, is that they eliminate fossil emissions. That's 5 to 10 times bigger than the storage effect. So the storage effect is just a kind of a fake argument in this sense. So the biggest market failure is that we are not involving the downstream benefits of the timberlands in the climate equation, and that is about to change, and it is changing quite rapidly, as we heard with construction in wood, etc. But from a timberland perspective, this is not good. It destroys scalability. It destroys the possibilities to grow the market.
Yeah, the transparency of the carbon accounting impact, the value chain, has definitely been an untold story, and I actually think falsely told, because as I said, in traditional greenhouse gas accounting, we look at a wood product and most GHG experts think about delayed emissions. It's just waiting to decompose and let something off, which undermines the storage, but also even more importantly, as you said, the magnitudes of order are different by replacing steel, concrete, and other products. So very interesting. Gwen, if we could turn back to you, I know one of the things that's been of high interest for you over time has been some of these other ecosystem services values as well beyond carbon, and that is an area where in different markets we've seen regulation really support things, but we now also are at a different moment that's looking at voluntary basis almost behind natural capital beyond regulated markets. How do you see those driving investment strategy or changing any investment execution on the ground?
Yeah, I think changing things on the ground more so in some geographies than others. Beyond carbon, there's a wide variety of environmental markets that put a price on conservation, put a price on restoration, and what that price signal does is it incentivizes landowners, land managers to change management in a way that helps to restore or conserve nature. These environmental markets are really important because what they do is they allow investors to undertake activities related to nature restoration, conservation, that create positive impacts on the ground and also generate a positive financial return for the investors. And not only that, but exposure to some of those environmental markets can enhance returns from management for traditional timber alone, depending on how the markets work. But also gives exposure to uncorrelated markets to timber, and that helps to reduce risk. So a lot of the biodiversity, investment in biodiversity, investment in conservation that we've seen to date has been focused in the US. Conservation easements, conservation land sales, the sale of mitigation bank credits related to stream restoration, wetland restoration, endangered species habitat restoration and conservation. And there's a few reasons that we've seen this concentration in the US. And I think one relates to one of the earlier comments around Government should be a facilitator and not always kind of a regulator in squashing good work that investors are trying to do. And that's kind of related to federal and state government funding for some of these conservation markets in the U.S. And not only that, but the U.S. Has kind of a long-term commitment to using environmental markets as a way to address challenges related to environmental quality, and that goes back to the 1990s in the U.S. with acid rain and the tradable certificate program, which was one of the first in the world. The U.S. also has really low baseline country risk. So if you're a timberland investor and you're looking to kind of expand strategies beyond management for commercial timber, kind of that traditional strategy alone, it makes sense to do so in a developed market context in some cases rather than an emerging market context. But if we really want to address biodiversity, conservation, climate, kind of the whole set of challenges ahead, we need to look at a much broader set of geographies than just these developed market contexts. Brazil is a great example where there's tremendous opportunity for conservation, biodiversity. There are some markets that are accessible to investors. There's a tradable certificate system for conservation reserves. There's also carbon markets, and I know carbon markets shouldn't be taking on all of the responsibility for positive conservation biodiversity outcomes, but the access to developing carbon projects in an emerging market context like Brazil, where you can layer on certified biodiversity benefits on top of climate benefits, I think that's another market mechanism that creates opportunities for investors who want to contribute to those types of outcomes.
Yeah, absolutely. There's the opportunity and landscape just seems to be proliferating in a strong way, but building on strong foundations from those regulated markets in the U.S., there's a lot we can learn, I believe. Alexi, one of the things that has been a pleasure to see over recent years is just how much church commissioners' ESG and impact programs have been growing and become very tangible, very clear, and transparent. I wonder if you could talk a little bit on some of these themes like climate, biodiversity, other sustainability initiatives from your perspective, how your forestry approach intersects with the broader mission of your organization.
Sure, yeah, so we, as an organization, we're committed to net zero by 2050, and we have responsible investment professionals and sustainability professionals, and we take an active approach in engaging with, for instance, companies that we invest in public markets, and also tenants on our farmland with long leases, long tenancies. And so sustainability, I would say, is at the heart of what we do and how we think about our investments. So that includes, environmental, social, and climate. And I think ensuring that you have the sustainability in place also ensures that financial returns are achieved in the long term for investments. But also we see these three as key systemic risks. So in terms of the wider market, so addressing them is very important, which we seek to do, play our part in working towards net zero. In a way, it's fortunate to be working in the forestry or timberland sector. It's one of the easiest asset classes in terms of sustainability, where our forests are certified to FSC, SFI, PEFC. So that's already a good starting point. And we seek to amplify not only the financial returns through the value-add opportunities that Gwen described, but also these positive externalities for society and climate and the environment. So things like higher and better use land sales, typically to recreational buyers who have a focus on amenity values, which typically supports biodiversity. Renewables like wind can coexist with forestry in harmony. Mitigation banking, conservation easements are typically biodiversity positive. and even carbon is typically good for biodiversity. One thing to consider with improving returns through environmental benefits as opposed to producing timber is the risk profile that the investments hold. So the reason, coming back to the reason why we invest in timberland, is because of the fundamental benefits that it provides. And so what we aim to do is build on top of that the core timberland return and risk profile, and add potential value driver on top of that. But you still have the fallback of timberland in case the value add doesn't succeed.
Yeah, absolutely. Thank you very much. We are coming close to time, and I think we'd be remiss as a panel if we didn't address social things just a little bit more. Alexi just mentioned tenants and others. One of the great parts about forestry is that forests exist throughout the world in mostly rural areas. And I think it's something like 1 in 5 people in the world is dependent on forest resources in some way. And Dea, I know this came up in our panel prep with you to consider some of the social dimensions of forestry. And I wonder if you might just share some of the top considerations you would have for the audience to think about from an opportunity perspective, as well as a challenge and risk on societal components as we invest in forests.
Yep, thank you. I think the most fascinating bit in this is that when we move from the traditional corporate social responsibility to mixed social responsibility with financial benefit out of it. So when we are moving in the space of not just on the timberland and getting to corporate social responsibility, but thinking of a different local context, country specific. When I come to where I come from in Tanzania, for instance, we have 700,000 areas that are under plantation forest, but most of the other land is on the natural forest, which it's a daily life for the villagers and the communities. For them, this is the most important thing. This is their life depend on this in all contexts. So some of this crucial thing is to make sure that the benefits get to the communities such that they will be incentivized to work on maintaining the forest and all the other benefits that come from them. So we have some examples, some of the carbon incentive projects that have taken place in the country. We have some companies like Carbon Tanzania who did some work, and working with the community, which is the most challenging part, making sure that you had their voices heard, and then they drive the process, the management process. So we have seen cases where people are given incentives like best health system within the land. Some people are given resources to build schools and increase the enrollment of different groups that are marginalized within the schooling system. So if you get into this kind of incentives based on the community, then at least you're sure they will be sustainable and people will be incentivized to continue protecting or managing the forest in a sustainable way. Yes.
Thank you. We are coming up towards time. I think there was a question somewhere on this side of the room. If we could take the one in the back first and then Phil.
Thank you.
The question, in case not everybody heard it, was how the new GHG protocol, land sector and removals guidance could be helpful or not to forestry investment. I will answer at 5:30 today, which is the happy hour. But for now, Peter, do you have thoughts on that?
I would lean towards mainly unhelpful, because they are stuck in the forest.
and they make it really hard to even demonstrate what's going on in the forest in a good way. I think there are there's big challenges in it, and a lot of folks are still trying to get the new guidance. It's only a draft into a format that is going to be as helpful as possible to the forest sector. To Peter's earlier point, the topic of substitution being counted as part of the climate benefit has basically been considered off the table since the start of the process, unfortunately. So that one has been almost a non-starter, but even the forest and the product carbon accounting are both really constrained by technical issues of the reporting requirements, in my personal view. Again, 5:30 if anyone wants to chat.
And I can just add kind of one tangential comment related to carbon accounting, and it kind of goes back to some of Peter's comments around the value of wood-based construction as a climate solution. Many of the certification standards that exist in real estate don't fully account for embodied carbon and don't account for the emissions reductions that result from the substitution of those wood-based materials for higher emissions concrete and steel. They require, last time I checked, they require kind of a comparison of embodied carbon wood-based construction versus concrete and steel traditional building materials, but don't require kind of any action or any kind of formal accounting for what those climate benefits are. So I think that would create some really awesome incentives to increase construction from wood-based materials.
Phil, a question up front, if we could grab the mic up this way. Just here.
Good morning, Phil Cobble, Forestry and Globe. My question, Peter, very interested to hear what you said about the 5 to 10 times sort of benefit from construction using timber. So what's the solution? Are we talking about sort of vertical integration of timber production through to construction? I'm thinking 20, 25 years ago, it used to be vertically integrated, wasn't it, Kate? From production right through to milling. Anyway, I don't know what else happened after that.
Well, I think that from a financial perspective, aggregating vertically would certainly be beneficial. Also, it's not just about construction, it's about all the products from the forest. And by the way, many are dependent on forest land, but we're all dependent on forest products. So it's the vertical integration is already there. We just need to see it from a financial perspective and not get stuck in the forest.
Yeah, I think there's cases certainly over the past 10, 15 years where some integration between traditional timberland assets and milling assets has been particularly useful, often in a defensive play against competitors, for example. But I haven't seen any big movements back towards the serious reintegration. Ourselves and others are looking at very specific strategic investment into forest processing where it can add value back to your asset. So if you're in an emerging forest area where timber markets are not strong, for example, if you need to bring a higher value add, if you're in a maybe emerging market where they're exporting basically undervalued raw logs or simple products, and you can capture more of that value in country, those are the investment theses that I think are most appealing, but there's still quite a lot of challenges in some of those. I see that the next slides are popping up soon, and I didn't see the countdown slide, so apologies to Haley if it was coming up. I'll take moderator's privilege and just do our final, do we still have 5 minutes? Fantastic. Well then, is there one more question? Okay, that's okay. Oh, great. I have more, it's fine.
Thanks. Tony Simons from C4ICRAF and Estonor Ventures. One of the biggest ticking time bombs we have in agriculture and forestry is the demographic bubble. Farmers are aging, both in developed and developing countries. And how are we going to think about bringing in the youth, and particularly in Tanzania, where, as an example, where parents want to send their kids to school so that they can learn not to be a farmer and not to be a land steward and to go and be a doctor or a lawyer or something else. So how will, in terms of business risk or in terms of the plus side of green infrastructure and mobilizing youth and this incredible, age dividend that Africa has, an example?
I'll let Deo go for that if you're game.
Yeah, thank you, Simon. I think this is a very, very crucial point, and one that has a lot of dimensions. I think from the sub-Saharan Africa, we know 90% is the youth, and this is the direction that is going. It's true that there is need to do a tremendous effort to bring in the youth into this, and unless we create enough awareness or bring in the financial sector to show that it's something that is paying doing that, then the parents are not going to be convinced to force their kids or the kids to get into, or the youth to get into the conservation and the climate mitigation aspect. So I think it's the way things are going to evolve based on the financial market that will determine the direction that we're going. But we need to do more to get into that level in terms of promoting serious investment that will attract youth into this.
I also have some optimism on this topic. I recently heard, it was Garrity Lansing from BTG, Timberland Investment Group, mentioned some statistics from a survey of consumers, basically. And the short story is they basically thought that wood products were renewable and sustainable, yet somehow the words that people associate with forestry, sustainable, renewable, environmentally responsible, did not rate highly in these surveys. So we have this disconnect between the products we need and use and all depend on and the activities that generate them. I do hope and believe that as we continue to improve the narrative around forestry and the understanding of the role of sustainable forest products and wood products in a sustainable future in the world around us, that is going to encourage younger talent in the next generation back into the sector and into agriculture as well. That the understanding that managing the land is part of our responsibility, also that it comes with careers like wildlife management, it comes with carbon components, it comes with climate, nature positive. All of these things are really exciting to the younger generations. And so this broadening of our view of natural capital and the asset class, I think, is an opportunity to encourage and recruit talent in from that perspective as well. It's not just anymore we go into forestry because we like walking alone in the woods, although that's good too. Yeah. Okay, I think we do have just a couple minutes, and Haley actually just said 0. But what I was going to ask, so conferences to me are a lot about connecting and learning. So I asked each of our panelists if they could do us a favor, not to end on a pessimistic note about what's gone wrong, but to help one another and in the spirit of connecting and learning, to share a lesson learned from forestry, a hard lesson that they hope everyone in the room can avoid. And maybe this will be a spark for the coffee break or the happy hour later to find out a little bit more about these. But who would like to kick off with your lesson learned for the audience, something we don't want to learn the hard way?
Don't connect the climate benefits of the forest with all those other ecosystem services. They don't lump well together. They're all important, but the climate benefit belongs with the wood and the wood-based value chains. That's where we need to focus. Put the climate together with the wood-based challenge, then we have a win-win for investments. It's the fossil stupid.
It is. Thanks. Gwen?
Yeah. I think a lesson learned is that, timberland is an asset. I've never heard it described as easy, but timberland is an asset class that's well suited for patient capital. I think a long-term investing perspective really underpins most timberland investments. So, yeah, I would keep that long-term horizon in mind.
Yeah, and I suppose continuing from Gwen's comment, with that long-term horizon in mind, not relying on a steady income yield from timberland, because in that way you forgo the ability to defer harvesting and try to optimize the timing of your sales, which is a key component of the value add from timberland investments.
Right on.
Yeah. So for me, I think the timberland, the carbon assets, or the natural capital, it's a bit complex area whereby it will vary from country-specific, community-specific, and society-specific. We don't have to struggle to get a unified kind of intervention. It has to take into consideration country-specific, community-specific for it to work properly.
Yeah, 4 excellent points. Well, thank you all for joining us this morning, and thanks to our panelists for sharing their insights today.
Thank you.